Hello again, people. Right, and in particularly Katy on Twitter. This is an answer to your question, Katy, about the divergence on M5 and on the RSI 5-minute chart, and how it relates to the higher time frames. So um, here's the. This is a sort of copy of the chart you sent me. The vertical line is where your chart ended yesterday, and then obviously this is all new price action. And there's the divergence you showed me, higher lows and lower lows on the actual price. And so the quick answer to your question, and it really is quick, is the higher time frames always take precedence. So and I'm going to use this video to sort of make some suggestions as well on how to sort of avoid being faked in to potential divergence. And there's numerous reasons why you've got that divergence there. You know, it shows power, momentum falling off. And the time of day makes a big difference as well. This is roughly the American session open. That's 1 o'clock, 2 hours difference on my charts. And you know, most of the stuff is done and dusted by the London session and so on and so forth. So, and then obviously you've got the stock market open, but I digress a little bit. The divergence is it's a sort of hit and miss sort of tool. I don't place so much um, uh, importance, especially on the lower time frames. I mean, H4 or daily divergence, yeah, that's quite a big thing. But the lower time frames, again, you know, your M15, M30 override M1, M5 without a doubt. The other thing I would like to mention and want to talk about is, you know, always be aware of where you are in relation to supply and demand on the left hand side of the chart. And this is why now I'm trying to emphasize the massive importance of you know, drawing your supply and demand areas using the line charts, um, and the clarity that gives you, as it were. So, you know, if you're thinking about this divergence here and you're looking at your price, there's a number of things that now I consider to be really important as a scalper. That's the pivot points and the Asian session high and low. So if you haven't got software to get these onto your charts, then you know the Asian session high and low, you can draw that manually every day, and it's, you know, it's probably as important as drawing manual trend lines in my opinion. You know, it's lazy to have indicators. You can become blind to them. At least I did anyway. You know, to the point they're not even worth having on your charts. But I'm not blind to any of these. The Asian session is so important. So when you're here looking at divergence, you know, you're instantly aware that you've broken a massive level. So it's highly unlikely that price, in my opinion, would try and break back up against that unless it's bouncing off of something on the left-hand side. So zoom out and have a look at what's going on. So instantly at this point here, if you were to consider going long, you'd want to break out of that level there, and once you had, you would want, you know, the next level, strong level. You'd prefer a cleaner gap. Sorry about that train making a racket, but that's because there's a footpath crossing over there. So I've answered your question about divergence and the RSI, Katy. Now let's get on to viewing the chart and understanding why the divergence isn't particularly important there. We've trended down below the Asian low, which is massively important. You can draw levels on all of these areas that make higher highs. So that's a trend starting point. So that's a massively important buying area that's been overwhelmed by the sellers here. So where would this go after this price has dropped below there? Well, to the next important buying area, which is over here. So, you know, long story short, if you're wondering about this divergence, get into the habit of drawing these levels on your charts, and you can see precisely then why price goes where it goes. This probably got hit by the price there. Can't remember whether it did or not. Yes, it did. You know, you've got the tails there. So, you know, the closes of the price, which is your line chart, are massively important. You know, so always flick between the two, and then you can start to understand why price does what it does. You know, there's a massive area there connecting that high to that low, to this series of lows there, and coming across. And look what's happened. Price has broken through it, come back, tested it, and then continued on down. So two answers in one there, or two suggestions in one. Learn to draw your supply and demand areas, and the higher time frame, as I think you were aware, always dictates what's going to happen on the lower time frame. So, you know, there's so much on this line chart that can give us an idea of what price is up to. You know, a series of lower highs, and it's finally broken down. So it's going to need a shed load of momentum to reverse on us. Anyway, hope that answers your question, Katie. Thanks for watching, and have a good day, folks. Oops, don't know what's going on here. Why is my software playing up? Finally.